Just give us your take on why we're seeing the naira continually under pressure, and how much longer are we going to see the naira on the back foot for?
Yeah, good morning. The naira has been under this depreciation because essentially of CBN policy. We had a situation where funds moved directly down to the BDC market, and that has created a lot of demand, because you have before, when the policy came out to reduce the amounts to be sold to BDC, what we witnessed was that we saw that the street rate went up, got to about 165, and I think that got the government worried, and they reversed the policy that enables banks to sell directly to BDC.
Yeah.
And removing that restriction, we now saw that then the currency in the street market appreciated while the interbank market started going up. Now, before then, because of the appreciation that was happening, most of the clients were no longer bringing forward their obligations. They were happy that the currency was appreciating. But when the reverse happened, we now saw more clients coming to the CBN windows and coming to the interbank windows to cover their various foreign exchange obligation. That is why you have seen this pressure, and you are still going to continue to see it, really.
Yeah. Now, one of the other big events this week when it comes to the bond market is the issuance of the 70 billion naira in sovereign paper, that in 3-year, 5-year and 10-year paper. Many are expecting yields to go at a slight premium to what they're trading at this stage. Now, yields on the 3-year paper have already been ticking up. What are your expectations for yields?
Yeah, for the 3 years, our expectation is that it's going to go up by about 10 basis points from the current secondary market trading. So we expect it to come out at around 10.9%. The highest probably that we might see might be 11%. And then for the 5 years, we expect it also to come out at around 11.4%. It's currently trading at around 11.3%. And for the 10 years, there's no much gap between the 5 years and the 10 years. So we expect that also to come out at around 10.45%. That is the expectation. The general thinking is that these are the levels that the yield should be, notwithstanding that across all of these tenor buckets, you are going to actually have increased demand in terms of auction. So they will be oversubscribed, but those yields will still print slightly higher than the current secondary market.
When we look at the yields and where they're trending, does this indicate that we're expecting a further increase in the central bank lending rate next week at the MPC decision?
I didn't get the question.
Are we expecting another increase in interest rates at the MPC meeting next week?
Oh, okay, at the MPC meeting. Yeah, I think the only thing that is going to cause a possible hike of MPC rate is really the pressure on the foreign exchange. In terms of the inflation, before now, for the beginning of the year, they've been battling with both inflation and the foreign exchange rates. But inflation dropping and dropping and dropping, and we've gotten to even a single digit. I think the only major pressure is now going to be the exchange rate. And to the extent that there is still a lot of pressure on the naira, then we might probably still see minimum of maybe about 25 basis points hike.
25 basis point hike. And as you say, we have got inflation under control, 9.4% in July. That's the first time a price is below 10% since May 2008. How sustainable is inflation? We don't have the August inflation figures yet.
Yeah, in terms of sustainability, in the short term, because we are in the harvest season, so the major contributor to inflation is really the food. And to the extent that now the foods rates are really low because of the harvest and diversifications that are available and options that are available for the people to be able to buy in terms of food. So you might still see that the inflation figure coming up sometimes next week might still be in the single digits, but in terms of its sustainability over a long period, that is a very hard call to make, because after the season and the food prices started going up, the effect of the salaries increase begins to have real impact, and possible government policies that might be coming up, then we might not see a single figure inflation.
Of course, we do have a finance minister who has proposed to keep that budget in check, which could bode well for inflation when it comes to local expenditure and recurrent expenditure on the budget. Dare, thanks very much for your insights this morning. Dare Otitoju is a foreign exchange trader at Global Markets, joining us from Nigeria this morning.